of a doji. And we can actually extend that question to the broad category of any candlestick signal. When is a candlestick signal confirmed? And we'll be looking at that as we move through the seminar, but especially when we talk about candles and Western technicals, if we see a candlestick signal confirming a Western signal, to me that would be a confirmation. But let's say we're only looking at the candles. When is a candlestick signal confirmed? What you could do is wait for the next session to confirm it. In other words, a close. Let's say here we have this doji or a spinning top, and you wanted that extra confirmation. It would be either, I'm not sure if the close was lower here, but maybe this one, a lower close. The advantage of waiting for confirmation, so for example, when we talk about a particular candlestick signal that we'll be talking about later, like a hammer, you know, the hammer is the bottom reversal signal. Don't worry if you don't know it yet, we'll be getting to it. You could wait for the next session to confirm it either on the opening or the closing. But by doing that, you've increased the likelihood of the trade working out, right, because you've confirmed the candlestick signal. But if you're buying at a higher price, what have you done to your profit potential? You reduced your profit potential, exactly. So, yes, you can wait for the confirmation. By doing that, you've increased the odds of the trade working out, but you've also decreased your profit potential. If you don't wait for that confirmation, you've increased the profit potential, but you've decreased your percentage of being correct. It depends on your trading style. There's no right answer for that. But with the doji, I'm going to show you something in a minute. I can show you now. We'll talk about, don't worry about taking notes on this. But if for some reason you sell in this doji or the spinning top, you could set a stop. If the market gets above the high of the doji, it's a bullish breakout. And we'll look at that within a minute or two. Remember, there's always a price that says we're wrong. That's one great thing about charts. Very hard to do with the fundamentals. Okay? The highest percentage, easily the highest percentage of technical analysts are in the Forex market. There's no doubt about it, because most is speculation. And secondly, think about it from a speculator's point of view. How, especially intraday, how can you follow all the fundamentals? Right, between the interest rate relationships, politics, economics, and on and on. What's the easiest way at looking at all the fundamental news? Look at the price of the market. Look at the price of the chart. Now, here we have a spinning top, and this brings us to the question about different data vendors. Okay. This is the same data. This is the euro, I believe. And two data vendors. And you can see one is a spinning top and one is a doji. So I would not be too exacting on saying, okay, this is a spinning top and this is a doji. I would view them the same way as long as the real body is very small. You know, we did a survey among FX traders, Forex traders, you know, what are they looking for from our company, CandleCharts.com? And one of them is, you know, he has a doji. Somebody says he has a doji in one platform and not a doji in another one. I would view these the same, exactly the same. And the reason that becomes important is because we could use doji, or in this case, spinning tops, as potential resistance. Before I talk about that, let me give you another difference between the doji in Forex and non-Forex. So first of all, one difference with the doji in Forex and non-Forex is that even if it's a spinning top, I would view it the same potential turning implications as a doji. Second one, this is non-Forex. This is a doji in the non-Forex market. The market closed here. It opened down here. And what happened by the end of the session? It held down there, right? Okay. In scenario 2, see, these are both doji following in a rally following a tall white candle. In scenario 2, what happened on the doji's opening? It gapped higher. And by the end of the session, the bulls had maintained the strength. So non-Forex, which is more likely a reversal, scenario 1 or scenario 2? 1. Okay. Can we have this in Forex? Remember, scenario 1, what happened? The market gapped down. Scenario 2, gapped up. Can't have this in Forex. What we're going to have with the doji in Forex is this. The opening and closing are going to be the same, or a couple, maybe a pip or two difference. But these are going to be Forex in the, these are doji in the Forex market. Yes?
With the doji in Forex, being the difference is that there's no gaps, would it be better to see, as in scenario 1 and 2, where the second one had made it high also?
Okay, the question is, if the intraday, although the doji, the opening and closing are going to be here, if during the session, whether it's a daily chart or an intraday chart, if intraday it pierces the high. Is that the question?
Yes.
Okay. One of my favorite charting techniques is if a market pierces a resistance area and can't hold above it, it's a great sell signal. Okay. If the market goes up here and then winds up closing down here and has to close down here to make the doji, I view that as a little bit negative, even if it's not a new high move for the close, because one of the great things about the candles, remember, it gives us that visual information about the psychology of the market, what's happening between the bulls and the bears. If the market, we'll look at shadows in a couple of minutes, but if the market has a long upper shadow here, what happened during the session? It had rallied there, right? Right. If the market was solid, what should have happened? It should have closed up there. So if it does this with this upper shadow, it's visually showing us the market's rejecting higher levels. I would view that. I would be more negative on this than I would be on this, because this has a bit of a lower shadow. Okay? We should always look at shadows as part of our analysis, which we will in a couple of minutes, but that's a great question. Okay, so these are doji and Forex. So here, for example, it's a doji. Well, obviously, it doesn't mean the market's going to fall out of bed like it did there. Okay, here we have a doji. Why do you think the odds of this doji calling a turn are higher than they would be without those blue lines? What are those blue lines? Resistance. Would you have those blue lines on the bar chart? Yes. Yeah. By the way, to make trend lines, angle trend lines, horizontal support or resistance, use the upper and lower shadows, just like you would in the bar chart, the highs and the lows. So